So why is finance important? Why spend any time on this stuff? Well, everyone at an insurance company should understand the impact of their actions on the finances of the business. People need to speak the language of business. And finance is more logic than math skills. Everyone can and should understand the basics. And there's accounting that's happening behind the scenes of every transaction that occurs at a company. And how the company keeps track of it all becomes very important to the success of the organization. Here's a game board, and you can see that we've got a high-level income statement and balance sheet depicted on the board. In the real world, the statements have much more detail, but we've simplified them to help illustrate the points in our exercises. And what we'll do is we'll move the coins shown on the bottom left of the game board to represent money flowing through the financial statements. And we'll make each coin worth $1,000. Now let's go ahead and sell something and see how the financials are impacted. We're going to sell a one-year policy on January 1st for $10,000 in cash. And losses are expected to be $6,000, and they'll be paid out 2 years from now. So you can see that we're being very specific with the wording that we're using and whether something is cash or not. And underwriting expenses are $3,000 paid in cash. So the question is, how do the financial statements look at the end of the year? You see this scenario on the bottom left, and it says that we've sold a one-year policy. So we have written premiums of the $10,000, and at the beginning of the year, that's unearned premiums. And because the policy, the premiums were paid in cash, we're going to represent that on the balance sheet as cash. By the end of the year, we've earned the premiums, so we show that as earned premiums on the income statement. We also, though, have incurred losses, claims expense of $6,000. And because we're not paying that out for 2 years, we need to hold that in reserve as an unpaid claim of $6,000, which you see as a liability on the balance sheet. However, the neat thing about not paying out a claim for 2 years is that we could invest that, take it out of cash, and actually invest in something, maybe some bonds that we have shown as an invested asset. Now, we had some underwriting expenses, $3,000, and they were paid out in cash, so that comes out of cash, and we show the underwriting expense on the income statement. If we work through all the income and all the expenses on the income statement, we're left with net income or net profit of $1,000. But if we look at the balance sheet, it doesn't balance. We have $7,000 in assets, but only $6,000 in liabilities plus equity. We resolved this through the fact that since we didn't say that we're going to pay a dividend, the $1,000 of net profit actually goes to retained earnings on the balance sheet. So once we do that, you can see that now the balance sheet does balance $7,000 both in assets and in liabilities plus equity. Okay, for our next scenario, let's set up the game board as we've described here. You've got $6,000 in invested assets, $6,000 in unpaid claims, and $1,000 in cash and $1,000 in retained earnings. So let's work through the scenario when you pay the loss 2 years after you actually sold the policy. And you can see that we've set up the game board with the $6,000 in invested assets, $6,000 in unpaid claims, $1,000 in cash, and $1,000 in retained earnings. Now we're going to pay out the loss. First thing that we have to do is turn our invested asset, our investment of those reserves into cash so that we can pay it out. So it moves from invested assets as we sell it into cash. Now we're going to pay that claim. $6,000 in cash goes out, but also unpaid claims. We don't have an unpaid claim related to this policy anymore. We paid that out. Unpaid claims goes down by $6,000. And you can see that the balance sheet balances. Assets went down by $6,000, and so did liabilities plus equity. You notice in this scenario that there isn't an impact on the income statement because we didn't give you information about new policies sold or whatever income we might have generated from the investment. So we're just trying to isolate this transaction. Okay, what if we didn't reserve enough? Let's set up the game board as described here and play through another scenario. and you're $1,000 short. So what do the statements look like if you pay out not $6,000 but $7,000 in losses 2 years after you sold the policy? We'll walk through some of the same dynamics that we saw in the previous scenario, which is that we've got to liquidate or turn into cash the invested assets that we had, generate cash from them. Let's go ahead and pay the $6,000 that we had reserved for before we get into a discussion of the additional $1,000 that we hadn't reserved for. So let's go ahead, as we had done in the previous scenario, pay out the $6,000 claims in cash. That means we don't have that unpaid claims as a reserve and liabilities, and we've taken care of the $6,000 as we did previously. However, we got the additional $1,000 that we need to pay out. So when we do that, let's go ahead and pay that out in cash. There's our $7,000 out. But when we do that, because we hadn't reserved for it, we now do bring the income statement into play. We have an additional claims expense, all else being equal, of an additional $1,000 in claims expense, which, again, all else being equal, means that our net profit is down $1,000 due to that under reserve. And now as you look at the balance sheet, unfortunately, it doesn't balance. So how do we make it balance? That negative profit that we have related to this transaction has an impact. Even though it's negative, it still impacts retained earnings. We had $1,000 in retained earnings, but now, because we had a negative profit, that also goes to retained earnings. It nets out. We have a total change in assets of $7,000 negative, and in liabilities plus equity of negative $7,000 as well. So the balance sheet does balance. Okay, so what did we cover in these exercises in this video? As I said, everyone at an insurance company, at any company, should understand the impact of their actions on the finances of the business. In every department, people need to speak that language of business. The first thing that comes out of the exercises is that the balance sheet always balances. And that's just the logic of how the statements are set up. It's not just the way the math works out, it's the logic of how these statements are tied together and how they're structured. And we also saw that profit is not always the same thing as cash. And there's accounting happening behind the scenes of every transaction that occurs. And the income statement and the balance sheet are integrated. They're just two different ways to look at the operations of the company. And the insurance business is easy to understand. Well, maybe sometimes, but actually there can be a lot of complexity behind the numbers. Okay, hope that helped. Thanks for watching.